Hey guys, welcome back to another video. My name is Lachlan and thank you for tuning in today. Just before we start today's video, I just want to say thank you for all the recent support on the videos you guys have given. I couldn't have asked for anything more. 30 subscribers over 2 videos. So thankful for that, and yeah, really appreciate all the support. And if you could keep supporting the channel, that would be great by leaving likes and subscribing, turning the notification bell on. Yeah, I'd really appreciate that. But yeah, thank you for all the recent support in the launch of this YouTube channel. Now today's video is going to be a little bit of a continuation from my very first video where I talked about how you can go from being a student to a millionaire. And if you haven't seen that video, make sure you check it out by hitting the card or checking the link in the description. But we're going to be talking how you actually purchase the investment that I talked about in that video, which was actually an ETF or an exchange traded fund. And in particular, it's an ETF that tracks a stock market index. Now, I'm not going to be explaining this all again. Make sure you check out that previous video that I just mentioned before. Click on that and that'll explain basically what this method actually is. But we're going to be talking about how you actually purchase this investment today. So the first thing you might need to know before you actually put your money into the stock market is, what is the stock market? How does it work? And why do I want to invest my money in it? Now, I'm not going to be explaining this too much or getting into too much detail about what the stock market is because it's quite complex. But there is a video that I'm going to leave in the description that's by Netflix, which basically explains the stock market in the most simple terms. It's about a 15-minute video. Make sure you go check that out because if you're new to the stock market, it's a really good basis for you to be able to know what the stock market is, how it works, and why you should invest in it. But the stock market is basically a place where shares of companies and businesses are traded between investors. People can buy and sell shares for a price, and the prices of a company reflects how the public actually views that company in that period of time. That's the shortest way that I can actually explain it. So after this video, make sure you go check out that Netflix Explain video because it's a really easy and concise way to understand the stock market if you're not sure. So now that we have like a little bit of a basis on what the stock market is and how it works, we can actually start looking on how we can invest our money into the stock market, into the ETF, so that we can further our wealth over the long term. So if we want to invest in shares of a company or an ETF, the first thing that we need to do is actually find a stockbroker. Now, a stockbroker is basically the middleman who takes your investment amount of money, and buys the shares of a company or an ETF on your behalf. Now, you may have to do some research based on your country here or wherever you may live in the world, but there are some main things that I would look at personally for me if I was looking for a stockbroker. So the first one for me is security. For me, if I'm investing my hard-earned money, I want peace of mind that my money is going to be safe and sound in a place where I can trust. I want to know that they have reputable security and that I can talk to someone in case something goes wrong with my investments. The second one is brokerage costs. Now, each time that you make a buy or sell order on the stock market, when you buy and sell shares, you actually have to pay a fee on that, usually. Some places don't charge fees, but lots of places do. Because I'm not investing all that often, a little bit of brokerage is okay, but I don't want to be breaking the bank with this amount. The third one is reliability. Now, I want to be able to access my investments at any point. Obviously, I can't do that out of hours on the stock market, but I want to be able to speak to someone real if I have problems with my investment. I don't want outages on the platform that I'm using at stupid times when the market might be open. I really want a reliable stockbroker that's going to help me make those investments at the times I want to. And also someone who's very trustworthy, and that comes under reliability as well. Now, here in Australia, I know there are 4 major banks that all offer brokerage services, which are Commonwealth Bank, NAB, ANZ, and Westpac. But there are also many other companies that offer brokerage that you're able to choose from as well. But because I banked with Commonwealth Bank before and they checked all those criteria that I talked about of security, brokerage cost, and reliability, I just decided to roll all my brokerage costs straight into them. Thanks for that. Now, I know in America there are companies such as TD Ameritrade or Charles Schwab, which all offer brokering services as well, but I'm not too sure on the American market in this area, so you'll have to do your own research, whatever country you might be in, on what the best stockbroker for you will actually be. If you're really unsure, maybe ask a family member who invests in stocks. They might have a really good stockbroker, but yeah, just do your own due diligence and find a stockbroker that is right for you. But if you're really not sure, just Google the best stockbroker in your country and that'll come up with heaps of options that you can choose from, and you'll be able to find something. Once you've found a stock brokering service, make sure you set an account up with them, and then you'll be all ready to go to invest your money in the stock market. So now that we have our stockbroker, we can actually make trades and be able to buy the ETF that we've been talking about. For this example, I'm going to be looking at an index fund that tracks the S&P 500 in the US. This index fund tracks the top 500 companies in the United States. Now, there are many different index funds that you can actually invest in, and if you actually just Google your country's index funds, it'll actually come up with a list of what index funds are actually available in your country. Now, we want to be aiming for that 7 to 10% range that we were talking about in that first video. So you want to find a index fund that over 10, 50, 100 years is actually getting that 7 to 10% mark over that very long time. And once you're looking at an ETF, there's usually a performance tab that they actually show on that index fund site, and you can actually click on that, and it'll show you how it's performed over 1, 2, 5, and usually 10 years, or since it was incepted. But really aim for that 6 to 10% range for something that tracks an index. Now that you've picked an index fund that is actually available for you to purchase on the stock market that you've got your stockbroker with, you can actually look for the ticker symbol for that ETF. Now, this is usually 3 or 4 letters. Now, you can actually look for that ticker symbol of that ETF, and this will actually help us buy those shares later because it'll identify what you're actually buying. For instance, Tesla in the US is TSLA, and if you put that into a US stockbroker, then you'll actually be able to buy shares in Tesla. It's just basically a way of identifying what you're actually buying on a stockbrokering website. So now that you've actually picked this ETF that you're going to invest in, you need to choose how much money you actually want to put into it.
Billions and billions and billions and billions and billions and...
So decide how much money you want to put in each month, year, or quarter, and do that dollar cost averaging strategy that we talked about in that previous video. In this example, I'm going to be investing $1,000 every 6 months. So let's say I put $1,000 into my share trading account. Now, personally, I'm going to be doing this on CommSec. This is the actual trading platform that I personally use. This is Commonwealth Bank's brokerage platform. So it could look different from wherever you're investing from or what stockbroker you're actually using, but for the most part, they're all pretty much the same. So now you need to go over to the place where you can actually make trades. It'll usually be under something called trading, and you need to go to place an order. Now, the first thing we'll need is that ticker symbol of that index fund that we talked about earlier. In my case, the S&P 500 index fund that I've been talking about is called IVV. So I put IVV into this box here, and then it pops up with the index fund that I want to invest in. Make sure that's correct when you're putting in your ticker symbol. So there's 2 boxes here that you can actually choose from. The first one is you can choose how many shares you want to buy. So say each share was $20. You can just put 5 shares in there, and that would come out to $100 of your total investment amount. Or what's easier for index funds and dollar cost averaging is actually placing the amount of money that you want to invest. This, in this case, it's $1,000, and this will actually spit out the amount of shares you can get at the market price if you click market here. And also remember, you can only buy shares during the hours of trading. Usually it's from like 10 till 4. I know in America it's 9 till 4, so 9 a.m. to 4 p.m. But just check what time your stock market is open in your country. So going back to the at market and limit prices, as you can see in these boxes here, if you click market, it will automatically purchase the shares that they're currently trading at. So say the stock market is buying and selling, people are buying and selling everywhere. At that period of time, say the shares were trading at $400, and if you clicked at market and place order, it will automatically buy those shares at the market price. But the limit price gives you a little bit more control, because you get to pick the investment amount of where they'll actually be purchased. So during the day, if it hits that price, it'll automatically buy those shares for you. But just to make it a little bit easier, we're going to be doing it at market. Since it's an index fund and we're just buying consistently, we're not trying to time the market or the price, we can actually just press at market and it'll do that for us automatically. Then down the bottom, once all that's done, it'll usually come up with a little total amount. It'll include brokerage and the actual investment amount that you're making. Make sure that you've got enough money in your share trading account to cover brokerage as well, if that's a cost for you. For me, it is here. Then you can click proceed, and hopefully your shares should buy right there and then if you've done it at market, or you might have to wait if it's at limit. You'll get confirmation of that, and then you'll be a proud owner of some ETF shares. And it really is that simple. It's those 3 easy steps of putting in the ticker symbol, choosing how much money you want or how many shares you want, and if it's a limit or market price. Market will buy it straight at the market price, or limit you can choose where you want that investment to be bought at. And if you consistently do this, it'll make it a lot easier, and you'll have to just fiddle around with whatever stockbroking app or stockbroker you're actually using, because they're all a little bit different, but they're all basically the same as well. If you've got any questions about how to actually buy shares on a stock market or anything like that, make sure you leave a comment down below. And if you're not too sure on what indexes are available in your country, make sure you leave a comment down below, and I'm sure to do some research for you. I love doing that. But I hope you enjoyed today's video, and if you did, please leave a like. It really helps me out a lot. Subscribe if you're new around here, and thank you for watching. I really appreciate it. Have a good one. See ya.